Good morning, everyone. Last month, ECB President Draghi set out the two conditions that could induce the ECB to act. One, a worsening of the medium-term outlook for inflation, and secondly, an unwarranted tightening of the short-term money markets. Since then, Eurozone inflation has indeed fallen, and money market rates have indeed risen. Ionia rose above the main refinancing rate in mid-January. I don't think either has gone far enough to get them to take any action yet. The fall in inflation is mostly accounted for by falling energy prices, which wouldn't be affected by EU monetary policy. Furthermore, the improvement in the Eurozone PMI suggests that the ECB's scenario of a gradually improving economy and rising inflation is still possible. Moreover, Draghi didn't say they would take an action if inflation fell further. He said they would take action if the medium-term outlook for inflation worsened. That suggests they're likely to wait at least until after the results of the ECB's survey of professional forecasters is published on February 13th to see whether inflation expectations are falling. And more likely, they'd wait until next month when the new staff projections will be announced. As for the rise in money market rates, that probably hasn't been severe enough to warrant action, in my view. Nonetheless, it's worth considering what they could do when they meet this afternoon, because they could be more concerned than I think. As always, they could cut the key refi rate further. This would obviously be of more symbolic importance than economic importance. They could even go further and cut the deposit facility rate, currently at 0, to negative. That would probably have a big impact on the euro, not only because of its effect, but also because of what it would imply about how difficult the situation is. That's also why I think there's little chance of them taking such a serious step now, because it would take away one of the more dramatic tools that they probably want to keep in reserve. More likely, the ECB could decide to inject more liquidity into the money markets in order to ease the recent tensions. Now, there are several ways they could do that. The simplest would be a new long-term refinancing operations. However, banks don't want to look like they depend on ECB financing, while on the other hand, the ECB is reluctant to lend them cheap money that's just going to be used for carry trades in the bond market. Another idea that's been discussed is that they might stop draining the liquidity that they injected into the market when they bought bonds of the troubled peripheral countries. That's called sterilization. This would inject a relatively small amount into the markets, but it would have important symbolic significance, as it would be tantamount to quantitative easing. And if they can do it once, they can do it again. Finally, a third possibility is that they might reduce the required reserve ratio. This would reportedly free up a small amount of about 50 billion euros. There are some other ideas that have been mentioned too, which I go through in my daily comment on the web. Now, I think if they take any easing action, it's likely to send the euro lower. No action, but a reaffirmation of their previous statement about policy being symmetrical is likely to send the euro a little bit lower. They're bound to get questions about the fall in inflation in January. If Draghi brushes this off again as a technical matter, as he did with the drop in German inflation in December, or reaffirms that the ECB thinks inflation will resume its upward trend, then the euro could rally. But if he appears concerned about the matter, then it's headed lower again. For more information, including technical analysis of the market, please read my full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.